demand for gold has absolutely surged across the world. In some countries, not so much, but in a lot of countries, a lot more. So let's get into what is going on here from the World Gold Council. So Turkey has increased their gold reserves by a lot. You've also got China, Egypt, Qatar, Uzbekistan as well. And then you've got Kazakhstan, Germany, Sri Lanka, Poland, Philippines, who've reduced their holdings ever so slightly. But compared to the amount of gold demand by different countries, it is clearly way, way higher. And when it comes to China, you have to ask the question, what is going on? Because they have obviously, well, I think we all know what's going on, but they have obviously increased their gold reserves massively. If you look at their FX reserves as well, which is basically their holdings of US dollar FX reserves, obviously they have actually reduced it. So if you go down here, look at this. China is selling their FX reserves. Why would they do that? Is it because they're seeing what's happening with Russia? And now they are thinking, well, okay, we don't want to have our FX reserves frozen. And you know, right now you have countries within the BRICS countries that want to create this reserve currency, which is going to influence the world massively. People don't understand this. It's not going to come all at once. It's not going to be like tomorrow they just come out with this currency and everybody starts using it. But it looks increasingly more likely that they're going to be using gold or oil or some type of commodity to back the currency, which I think is going to be very, very worrying for Western countries that have lived in this low interest rate la-la land and created these massive financial bubbles, which have essentially just kept their economy above water instead of sinking. And that's really the dynamic that's played out. So you've had this change and gold demand trends for the full year in 2022. 2022, strongest year for gold in over a decade. And there, of course, the last time gold demand was this high was just after the financial crisis. So what does that kind of tell you about where we are right now? I'm not the guy who's going to sit here and say gold is an investment, gold is a get-rich-quick scheme, because it's not. I just believe really gold is insurance, at least the physical stuff. When you hold it, gold or silver is just insurance for your money. It's insurance for government stupidity. The great thing about gold is you don't have to hold like 50% of your wealth in gold. You can hold 10, 15, 20% of your wealth in gold, and that will cover the rest of your wealth. So in essence, if your currency fails, if the government's currency fails, then the gold will just explode in value. And then you essentially have this other dynamic at play, which means that it hedges you against that happening, because your gold surges in price. It accounts for all that money, that paper that is essentially worthless now. Speculating on the price of gold is also something that you can do through gold miners, and I don't think that's particularly a bad thing to do. I hold personally a lot of gold miners that pay me to own them in the form of a dividend. So that's an actual investment. But when you're just speculating on the price and buying miners that don't pay you anything, that's really just speculation. I don't want to give investment advice on this channel. And this is the gold price versus the Canadian dollar. And you can see it's at the highs. So if we go back to like the highs in 2018, 2019, you're talking 1746. And you're now like, it's insane, isn't it? It's gone up like 30%, over 30% since then. So gold prices have gone up over 30% since then, which is incredible when you think about where the stock market is right now, how volatile other investments have been, like even bonds during that time. So it's kind of insane. So if we go to gold versus the Turkish Lira right now, but you can see, you know, Turkey has had what this looks like a dark pool candle or something. If you look at this, you can see how essentially gold hedged you against the inflation of the Turkish lira that has happened. This is real example of what's happened. And you can see gold has just been surging, surging, surging. And this is how gold is insurance, essentially, because, you know, what Turkey has done has essentially kept interest rates low instead of raising them. Inflation has gone and spiraled out of control, and the currency has just become worth less or worthless, whichever way you want to look at it. But it's kind of incredible when you think about it. Another thing I want to show you, which recently happened, is gold versus the pound, because again, this shows you gold right now in the UK versus the pound is at all-time highs. And, you know, back when the pound crashed, I was saying that, you know, gold was really the only place that people could go, because the US dollar had already moved, and I wouldn't have gone into US dollars. It had already moved way too much to do that. You lost too much. But gold, look what happened with gold. It essentially spiked, and you can see how it's kind of crazy. And, you know, because the pound did actually come roaring back in a sense, because it hit a low from 1980s, I think it was, and bounced off that low. But the thing is, you have to think in the future what is going to happen with the pound, because essentially the pound has hit its ceiling now. That rally seems to be fading off. Every time these rallies happen, it's going to a lower high to a lower high. And it's the same with the Canadian dollar. So you have to ask the question, well, what is going to happen with these currencies in the next crisis? And they're going to go down to a lower watermark and a lower watermark. And they're just going to be worth less and less and less as time goes on. Whereas gold, as we know, because of charts like this, you can see that gold has served you well. You can see how gold since 2007 has gone from around 341 pounds per ounce, I'm guessing that is, to 1,552 pounds per ounce. So that is a huge increase. You know, it's gone up 2-3x since 2008. And that is because of the government's stupidity that we have seen in between them. And think about where inflation has been. We've talked about where real inflation has likely been. And, you know, I find these things very interesting, because I don't really think there is much risks holding gold. I think it's more the risk of not holding gold or silver. And I think people who don't understand it, don't realize it, they could be in a lot of trouble in the next 10 years when their currency is inflated and worthless, and they're stuck in illiquid assets that, you know, might be worthless. I mean, think about it. One thing to look at, especially, I wish I could have brought up this chart, is the property prices in the UK. Because real inflation-adjusted property prices are actually down. They're actually going down, but nominal prices are going up. So to people who aren't used to that dynamic at play in the UK, for instance, they think that their home value is increasing when actually it's going down, because if you've sold that home, it's going to buy less than it would have bought a year before. And that's especially the case if you're moving outside of the country, because the currency is worth less. And if you're not holding gold or any sort of hedge against that, then you are in a bad predicament. So I think it could lead to a lot of people being trapped as well, which is going to be interesting. And I just think that the setup that we have here is just not looking good at all for the masses, for the herd. And they've really been lured into this trap, this debt trap. It's going to be a sticky ending for them that's going to happen. So anyway, if you've enjoyed this video, guys, you may like this video here. You may also like this video here. And I will see you guys on the next one. Take care of yourselves, guys. Bye-bye.